Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is December 6th. Today we are going to take a look at one out of the industrial sector. This is Emerson Electric. Let's jump right in. If you want to know more about this company, check them out at www.emerson.com. That's www.emerson.com. That is their homepage where I pulled this information from. Go boldly. Emerson is a global technology, software, and engineering powerhouse driving innovation that makes the world healthier, safer, smarter, and more sustainable. And some of their products: actuators, advanced industry software, asset performance management, automation software, control safety systems, electrical and lighting, industrial and factory automation, measurement instruments, test and measurements, regulators, professional tools and vacuums, welding, assembly and cleaning, operations management software, and valves. And what does that all mean? Really, this is a company that caters to other companies. If you're in the management field or construction field, you might buy some of electrical and lighting. If you are in a maintenance field where you're maintaining buildings, you might be using their products for asset performance management, advanced industry software, their control and safety systems, industrial and factory automation. If you were a company like GM or Ford or Chrysler, Dodge, Prologis, I think is the name of it now, you might use some of their industrial and factory automation where you're automating some of your processes in-house. Measurement instrumentation, let's say you're a company that maybe our pharmaceutical company, for example, you might use some of their measurement instrumentation, test and measurement products, regulators, valves. That'd be someone who's maintaining buildings. You might use some of their regulators and valves in your HVAC systems, your heating and cooling systems, or your plumbing systems, your piping systems. You might use, for example, if your building is heated by steam, you have valves and regulators and actuators that utilize that. So those are the type of companies that use this company's products, and that is who Emerson is providing products for: other companies and other industries like construction. Now, the reason we are taking a look at them, down 0.74% on the day. Not a huge drop, but a drop nonetheless. This was one that was on the list, so I've been wanting to cover this one. Emerson Electric Company, ticker EMR, out of the industrial sector, closed out the day at $87.70. 52-week range as low as $76.94, as high as $100.62. They are floating between that 52-week high and 52-week low. Average volume 3 million. Today's was 2.5. Lot of volatility overall throughout the day. Market cap of $49.998 billion. A beta of 1.32, and beta is the volatility of the market. And as you can see, very volatile overall, and they are more volatile than the overall market. PE ratio, price to earnings, $23.58. I believe this one is a little too high right now. I'd love this to come back into the 15, 16 range, somewhere in there or lower. Earnings per share, EPS, sitting at $3.72. Next earnings date, somewhere between February 6th and February 12th. Look for it there. For dividend, $2.10. They are a quarterly payer. Nice starting dividend yield on this one, 2.38%. Ex-dividend date, November 16th. They will pay out December 11th, so that's coming up for those of you who may be shareholders of this company. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from, of $105.81. So they see some upside in the stock price and hitting a new 52-week high. Now let's get into the statistics. We're going to look at dividend yield theory. To do that, we go down to dividends and splits. We look at their 5-year dividend yield average, 2.59. We compare it to its current 2.38. And this one is potentially overvalued currently. So again, you'd want to get this closer to its 52-week low. Back down here under 78, I think would probably be a good buy on this one, and preferably setting a new 52-week low if it was to bust down through this. Right now everything's running up, so I don't know if that's going to happen anytime soon, but might be worth throwing on the watch list if you are interested in this company. Now, payout ratio, 55.91%. I look for 75% or lower, so meets that criteria for me and gives them a lot of runway to increase that dividend, buy back shares, pay down debt, reinvest into the company, all the things you can do with free cash flow. And that is what we are going to look at next. Go into the financials, a lot of good information here. You're going to look at their balance sheet, their income statement. Is their revenue growing? What are their debt to assets ratio? Are they paying down debt, or are they taking on more debt? Are they buying back shares? What are they doing as a company? You really want to understand that if you are buying individual stocks. For this exercise, we are going to look at free cash flow. We want growing free cash flow because that is what dividends are paid out of, and we want growing free cash flow over time so that we have growing dividends over time. 2020, 2.5 billion, 2021 up to 2.9 billion, drop in 2022 down to 2.3 billion, back up so far in 2023 so far in 2023 they have only announced 274 million. So not sure what all we will see for the rest of the year, but it does look like they are going to be down free cash flow, but up significantly in this next line, repurchase of capital shares. So that is the other thing I like to note. They are repurchasing a lot of their own stock. Now let's look at this real quick. 2020, 2.5 billion, but repurchased 942 million of its own shares, or 942,000 of its own shares. Decreased that share repurchase in 2021, so that might account for some of that increase in the free cash flow. Not the case in 2022. Same repurchase of shares, but a decrease in free cash flow. So there's definitely a decrease in free cash flow in 2022. And then so far in 2023, they have been very aggressive, over 2 million shares repurchased. So if they do have declining free cash flow in 2023, it may indeed be because they have gone very, very aggressive in repurchasing their own shares, as you can see here. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure you're picking more than one so that you can make sure the information you are getting is accurate and back checked that it's up to date. They have 19 stock analysts that have taken a look at this. They call it a consensus buy, and they have a low estimate of $89. It currently sits lower than their lowest estimate. So if it came back up to their low of 89, that would be a 1.49% increase in the stock price. Average estimate of $104.42, that would be a 19.07% increase in their stock price. And if it happened to hit their high of $120, that would be a 36.84% increase. All the while, you could collect that 2+% dividend yield. Now, I like to get into statistics, and you're going to find the same information here in the financial statistics. This is the forecast right here. You'll see their dividends. We're going to see that on the next slide. A lot of good information. They just present it in a little different manner. Plus, they go back a little bit further, which is part of the reason I like stockanalysis.com. They do go back further than Yahoo Finance. And here we are going to look at return on equity and return on invested capital. I like 10% or better for both of those metrics. And that tells us how efficiently the company is reinvesting back in itself. And this one, return on equity, 83.6%, smoking high. That is an awesome return on equity. Return on invested capital is a little lower than the 10% I look for. I also look at EPS forecasted growth. I like 5% or better, but they did not list it for some reason here, so I would need to do a little bit more of a deep dive on this one. They didn't list revenue growth forecast either. Now we're going to jump over and look at the dividends. As you can see here, quarterly payer. They do pay out on the March, June, September, December timeframe. Very, very low payout ratio, only 9.18%. So a lot of room to increase that dividend over time. Very low dividend growth though, at only 0.97%. So with a around 2.3% dividend yield, I would expect to see a lot faster dividend growth, especially with this payout ratio so low. So this is a bit disappointing on this one. This one would probably not go on my watch list just because of this low, very low, under 1%. I would assume go into a company like Verizon with around the same dividend growth, but a much higher dividend yield than a company like this, even though its payout ratio is very low. Just no dividend growth. That just is disappointing for a company with such a low dividend yield and such a low payout ratio. Overall, not a bad company. Might be interesting, especially if they picked up this dividend growth. And obviously, if you can get it at the right price, any company is a good company if you can get it at the right price and there is projected for future stock appreciation. This is the vested interest stock screener. This is how I look at a video or a company on a high level. This is also how I set up the videos. You can pause this and go through it at your leisure. And that is it for this one. Let me know what you think of Emerson Electric. Is it in your portfolio? Is it one you are watching? Really love to hear from you in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. I do stock pick of the day videos like this Monday through Thursday. And I also do a portfolio update every Sunday. So tune back in for that. Again, hit the subscribe button down below, hit the notification bell, and join us on this journey to financial freedom. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Emerson Electric you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.